Hi, my name is Jim and I was retired. Modified Adjusted Gross Income, MAGI. When you see those initials, do you think like Rod Stewart and say Maggie? Or around this holiday period of time, do you think Magi? Well, we're not talking about the Three Kings of Orient or Maggie May. It's Modified Adjusted Gross Income. Stay tuned to this video and I'm going to talk about three Magi that come visiting during retirement. Melchior, Balthazar, and Gaspar. The names are not found in the Bible, and Magi is not found anywhere on a 1040. It's a mystery. But we're going to delve into three different definitions of modified adjusted gross income that you're likely to experience in retirement. There are a few others, but I'm going to concentrate on these three. The first Magi that I'll discuss is Melchior, and this is the modified adjusted gross income that helps you earn premium tax credits for purchasing pre-Medicare health care on the ACA. Really, it's the only way to afford health care before Medicare is to qualify for those premium tax credits. And in order to do that, we've kept our income between 100% and 400% of the federal poverty level. That makes it high enough that you don't qualify for Medicaid in your given state, but low enough that you still get premium tax credits. In the past, you hit a subsidy cliff, where if you exceeded 400% of the federal poverty level for your family size, then you got no premium tax credits. And suddenly, healthcare could double or triple in cost. So we've kept it between 100 and 400% of the federal poverty level. In early 2021, that level was just under $69,000. And that was our modified adjusted gross income goal for this year. Well, early in 2021, the American Rescue Act changed the formula to allow you to earn more than 400% of the federal poverty level and still qualify for premium tax credits. In fact, the formula changed so you'd never pay more than 8.5% of your modified adjusted gross income on insurance premiums. And so we went for a higher goal of $99,000 in modified adjusted gross income. It allowed us to still qualify for premium tax credits, but also accomplish some Roth conversions. Obviously not big ones, just modest ones that took us up to that level. What is the definition of the modified adjusted gross income? You start with that line 11, but you add in tax-exempt interest as well as some foreign tax credits. Those come off during the AGI calculations, but they get added back in for this modified adjusted gross income. Now, it's important to keep in mind this is prospective. If you have stable income, you're likely just to take line 11 from the last tax return and make modest adjustments. But if you're in early retirement and your income really is your withdrawals from retirement plans, then you need to make a careful estimate of what you expect for interest, dividends, other income, capital gains, any rent that you may have coming in. All of that counts as income. If it counts on AGI's line, you got to include it in your MAGI line too. Now, an important note on this, if you're taking Social Security, the taxable portion of your Social Security, and again, that can be taxed up to 85% of your Social Security could be taxable depending upon your other income. But you need to add back in the untaxed portion of your Social Security into this calculation of a modified adjusted gross income. It's another reason why you might want to wait until 70 for Social Security. I have some other reasons in the video linked above. So adding back that gold into your definition of a modified adjusted gross income allows you to qualify for premium tax credits based on your family size. As I reported in an earlier video, there's a catch-22 on these premium tax credits. It is based on your family size seeking insurance, but you still need to report your tax family's income. So a couple, for instance, one on Medicare and one still on ACA, reports the couple's income, but the credits only go to a single coverage, and that means they don't go as far. And also keep in mind that the formula in 2022 is still generous under the American Rescue Act, but in 2023 the cliff could return. You may need to keep your income below 400% of the federal poverty level to qualify for premium tax credits. The second Magi I'll discuss is Balthazar, and instead of myrrh, he brings an extra premium charge for your Part B and Part D premiums in Medicare if your Magi is too high. It's called an income-related monthly adjustment amount, or IRMAA. This is the modified adjusted gross income that decides whether you pay extra premiums for your Part B and Part D Medicare. If you're a single person and you have more than $91,000 in modified adjusted gross income, you'll pay those extra amounts. And if you're a couple, both of you will pay those extra amounts if your income is above $182,000. This definition is pretty simple, and the Social Security Administration is going to do the calculation for you. In the coming year, 2022, the extra IRMAA charges will be based on your income, your modified adjusted gross income, in 2020. And they'll just tell you what your extra premium is based on that amount. Well, if you've managed to keep it below those levels, you're not going to get surprised 2 years later with an IRMAA charge. Now, you can appeal these charges, but it's a pretty simple definition. The Social Security is going to look at line 11 and add back in tax-exempt interest. You can appeal these decisions when you see the bill and tell them your life circumstances have changed. But likely you're going to have to pay those extra premiums at least for another year until the IRMAA charge is calculated for the next year based on income 2 years ago. The final Magi that I'll discuss is Gaspar. And frankly, I sense I'm not going to have to deal with Gaspar too much. And this is the modified adjusted gross income that would trigger a NIT, a net investment income tax of 3.8% for an individual earning more than $200,000 or a couple earning more than $250,000 in a given year. So this definition of Magi is even different than the others. It adds back in foreign tax credits as well as credits you may have gotten for a controlled foreign corporation or a passive foreign investment company. Again, most people don't have that foreign income, and so AGI is going to be the same as MAGI for the NIT tax. Keep your income below those levels of $200,000 for an individual or $250,000 for a couple, and you can avoid the NIT completely. It's what I plan to do in planning out my retirement income. Now, there are other Magi out there, particularly around education tax credits and child care tax credits, as well as two separate MAGI, one for qualifying a traditional IRA contribution and another for a Roth contribution. But since I'm past child raising, educating children, and saving for retirement, I'll leave those characters for some other videos. Now, I'll conclude with my standard word of warning. I am not a professional. I have no special initials after my name. So take these as entertaining ideas from one educated consumer to another. Always do your own due diligence and seek out a professional if you need to. Hey, and if you liked this video, please be sure to like and subscribe and hit that notification bell. You'll get a notice when I do my next video. Thanks.